Bitcoin's incredible rise in 2024 set the stage for what might be its most transformative year yet. With a pro-Bitcoin president about to step into the White House and governments worldwide scrambling to print more money than ever before, the stage is set for Bitcoin to soar or stumble. In this video, we'll uncover 5 powerful reasons why Bitcoin could explode in 2025 and 5 hidden dangers that could stop it in its tracks. If you want to truly understand Bitcoin's future, and if you've ever wondered how to protect your financial future, this is the only video you need. You cannot afford to miss this. Guys, we launched our flagship ecosystem product, ICN.live. It's a brand new and fresh Web3 news platform where you'll find articles in gaming, AI, blockchain, and of course, Bitcoin. And if you're interested in receiving great insights and market updates straight to your email, don't forget to subscribe to our newsletter. You can find all the links in the description below. This episode was brought to you by Cirrus Ventures, a leading global investment firm that specializes in Web3 and blockchain native investments in the early stage as well as ecosystem funds. Cirrus takes a research-driven approach to venture capital, leveraging on their global tier 1 partnerships combined with in-depth industry expertise. Cirrus Ventures offers a range of core products through Cirrus Labs, including venture investing, fund management, and incubation programs. Cirrus' portfolio consists of over 70 projects across various sectors, including Republic, Polygon, Near, Oasis Network, Peak, and many more. More details in the description. My name is Kareem and welcome back to the Crypto Code by ICN Talks. Before we start, let's look at what happened last year. The year 2024 was nothing short of historic for Bitcoin. The April halving event slashed mining rewards to 3.125 BTC per block, effectively halving the number of new Bitcoin entering circulation daily. This reduction meant that approximately only 450 Bitcoins are being mined every day, further tightening an already scarce supply. With Bitcoin's hard cap of 21 million coins, this halving underscored its unique position as the only asset with a truly fixed supply, a feature that separates it from equities, commodities, gold, and even cash, all of which can have their supply expanded. This intrinsic scarcity played a significant role in shaping Bitcoin's price action, as demand surged from both retail and institutional investors eager to acquire a piece of this limited resource. Institutional adoption reached unprecedented levels last year, driven in large part by the approval of multiple Bitcoin spot ETFs. These ETFs offered traditional investors a seamless and regulated way to gain exposure to Bitcoin, removing the complexities of self-custody and direct purchases. Financial giants like BlackRock and Fidelity led the charge, leveraging their massive distribution networks to attract capital into the Bitcoin market. And the result was a dramatic increase in demand, which, when combined with the reduced supply post-halving, created the perfect storm for a significant price rally. For the first time since the 2021 bull run, Bitcoin's price soared past $100,000, solidifying its position as the premier digital asset and a store of value in an increasingly uncertain economic landscape. And the interplay between supply and demand became a cornerstone of Bitcoin's narrative in 2024. Unlike traditional financial assets that can be diluted through stock splits or additional issuance, Bitcoin's supply remains immutable, making its value proposition unique. As the daily mining rewards decreased, miners actually became selective about when to sell their coins, often opting to hold in anticipation of higher prices. This behavior further reduced the circulation supply, amplifying the effects of heightened demand and driving prices even higher. The combination of Bitcoin's fixed supply and increasing global interest positioned itself as a key asset for both wealth preservation and speculative investment, making 2024 a pivotal year in its history. But that's not all. Beyond the price action, 2024 saw significant technological advancements within the Bitcoin ecosystem. The Lightning Network, Bitcoin's second layer scaling solution, reached a new peak in adoption, enabling faster and more cost-effective transactions. This development was instrumental in driving merchant adoption globally, particularly in regions where traditional payment systems are either unreliable or prohibitively expensive. The mainstream media also shifted its narrative on Bitcoin. Once dismissive of its potential, outlets like Bloomberg, CNBC, and the Wall Street Journal began covering Bitcoin as a serious financial asset rather than just a speculative tool. This shift was largely driven by endorsements from influential figures, including top economists and fund managers. Macroeconomic factors also played a pivotal role. The Federal Reserve's cautious stance on interest rate hikes, combined with increasing fiscal deficits, contribute to a weakening US dollar. This made Bitcoin's narrative as an anti-inflationary hedge more compelling than ever. Meanwhile, geopolitical tensions from the ongoing Russia-Ukraine conflict to escalating trade wars fueled global uncertainty, driving both retail and institutional investors towards Bitcoin as a safe haven. These geopolitical tensions had ripple effects across the global economy. I think it's safe to say that Bitcoin had an amazing year in 2024 with incredible milestones. We looked at a historic price surge driven by the halving event. We looked at increased institutional adoption through Bitcoin ETFs. We looked at technological advancements through the Lightning Network and a shift in media coverage, all very bullish. And perhaps the most significant development was the political shift in the United States. Pro-Bitcoin politicians gained traction, culminating the election of a crypto-friendly president. This new administration promised clear regulatory frameworks and even floated the idea of a strategic Bitcoin reserve, signaling a potential paradigm shift in how governments perceive crypto. And globally, countries like El Salvador, which already adopted Bitcoin as legal tender, doubled down on their Bitcoin strategies. Meanwhile, emerging markets across Africa, Southeast Asia, and Latin America saw a surge in Bitcoin adoption as citizens sought alternatives to failing fiat currencies. Europe also made strides with its Markets in Crypto Assets framework, also known as MiCA, which set the stage for harmonized regulations across member states. This clarity attracted institutional investors who had previously been hesitant due to regulatory uncertainties. Even traditionally conservative financial institutions began exploring Bitcoin, citing its potential as a hedge against inflation and geopolitical risks. Can you imagine if the US implements a strategic Bitcoin reserve? That'll be incredible for the industry, and I think a lot of other countries will follow suit as well. So, let's get started with the good news. Here are 5 reasons why Bitcoin could continue its bull run in 2025. Number 1, post-halving supply shock. Historically, the year following a halving has been marked by significant price appreciation. With Bitcoin's supply issuance now cut in half, the reduced new supply is expected to collide with increasing demand, pushing prices even higher. And in previous cycles in 2013, 2017, and 2021 have all shown this trend, and 2025 is unlikely to be an exception. This supply shock is not just a theoretical concept. On-chain data from Glassnode reveals a sharp decline in exchange reserves, indicating that investors are moving their Bitcoin off exchanges and into cold storage. And that's only bullish. This behavior is a strong signal of long-term conviction, as it reduces the circulating supply available for trading. Also, miners, the primary source of new Bitcoin, have shown a tendency to hold rather than sell their rewards post-halving, further tightening supply. Number 2, institutional adoption at scale. The approval of Bitcoin spot ETFs has opened the floodgates for institutional capital. Pension funds, endowments, and sovereign wealth funds are now allocating portions of their portfolios to Bitcoin. Also, major corporations like Tesla and MicroStrategy and Square continue to accumulate BTC, adding to the scarcity. Institutions are not just buying Bitcoin, they're actively participating in the ecosystem. Fidelity and BlackRock, for instance, have launched custodial services tailored for institutional clients, addressing long-standing concerns about security and regulatory compliance. And the emergence of Bitcoin-related financial products, such as options and futures, has enabled institutions to hedge their positions effectively, making Bitcoin a more attractive investment. And the impact of these developments is evident in the rising volume of Bitcoin transactions settled through institutional platforms. CME Group's Bitcoin futures market, for instance, has seen a surge in activity, reflecting growing interest from traditional financial players. This influx of capital not only boasts and boosts Bitcoin's price, but also reinforces its status as a legitimate asset class. And I'm also seeing this. Startups innovating within the Bitcoin ecosystem are another driver of adoption. Companies creating Bitcoin-native financial services, including lending platforms and payment gateways, are attracting significant venture capital investment. This expansion of Bitcoin's use case is creating a feedback loop that strengthens the asset's fundamentals and drives its price higher. Finally, partnerships between traditional financial institutions and Bitcoin startups are creating innovative solutions. Banks are beginning to integrate Bitcoin services such as custodial accounts and seamless fiat to crypto conversions. This collaboration is further normalizing Bitcoin's role in the financial ecosystem and solidifying its place as a mainstream asset class. Number 3, regulatory clarity. With the new administration's pro-crypto stance, 2025 could be the year when the US finally implements a comprehensive regulatory framework for digital assets. The proposed shift of oversight from the SEC to the CFTC could pave the way for a friendlier environment, encouraging more participation from institutions and retail investors alike. And even beyond the US, other nations are following suit. As I mentioned earlier, the European MiCA framework, set to be fully implemented by 2025, provides a harmonized approach to crypto regulation across the member states. This regulatory clarity is expected to boost investor confidence and facilitate cross-border crypto activities. And regulation is also unlocking new opportunities for innovation. Startups are leveraging the clarified legal landscape to develop the products that integrate Bitcoin with DeFi platforms. These innovations are not only expanding Bitcoin's utility, but it's also attracting a new wave of users and developers to the ecosystem. So the alignment of international regulatory frameworks is creating a new era of Bitcoin adoption. Governments are now viewing Bitcoin not just as a speculative asset, but as a potential tool for economic empowerment. This shift in perception is laying the groundwork for a widespread adoption across industries, from finance all the way to technology. Number 4, global monetary instability. Central banks around the world are grappling with mounting debt and inflationary pressures. Essentially, they're bankrupt. As governments resort to money printing to address fiscal crisis, Bitcoin's fixed supply becomes an increasingly attractive alternative. Countries like Argentina, Turkey, and Lebanon have already seen surging Bitcoin adoption amid hyperinflation. The narrative of Bitcoin as a hedge against monetary instability is gaining traction even among developed economies. In Japan, where the central bank's ultra-loose monetary policy has sparked fears of a currency devaluation, inflation, Bitcoin is emerging as a viable alternative for preserving wealth. And similarly, in the UK, the combination of Brexit-related economic challenges and inflation concerns has led to a surge in Bitcoin interest. The adoption of Bitcoin as a tool for financial inclusion is also accelerating. And number 5, Bitcoin as a strategic reserve asset. I know, I never thought we would see this day, but a growing number of governments and corporations are beginning to recognize Bitcoin as a strategic reserve asset. In 2025, this trend could accelerate, with countries following the footsteps of El Salvador and corporations like Tesla diversifying their reserves into Bitcoin. So the potential creation of a strategic Bitcoin reserve by the US, as proposed by pro-Bitcoin policymakers, could set a precedent, signaling Bitcoin's acceptance as a legitimate component of sovereign wealth. This global shift would drive demand and establish Bitcoin as an indispensable asset for financial stability. So as a recap, the 5 main reasons Bitcoin's price rally could continue in 2025 are: number 1, post-halving supply shock; 2, institutional adoption at a scale; number 3, regulatory clarity; number 4, global monetary instability; and 5, Bitcoin as a strategic reserve asset. I find it extremely fascinating that when I first got into crypto, it was purely just retail. Now then it became retail plus institution, and then 2025 could be the first time we see retail plus institution plus government, where honestly there's going to be such a limited supply of Bitcoin available for everyone to buy. So make sure, not financial advice, but I would make sure to have some Bitcoin. Now, I'm a firm believer that we should always be cautious when there's euphoria and greed in the market. This is my 3rd cycle, and it's honestly never a boring day in crypto. So it's crucial to remember that with every bullish wave, there are always risks lurking just beneath the surface. So let's now take a look at 5 potential challenges that Bitcoin might face in 2025. These are factors that could significantly impact Bitcoin's path forward, and understanding them is essential for anyone watching the crypto space closely. And before we dive in, let me remind you that nothing in this video should be taken as financial advice. This is just a look at some risks that Bitcoin could face in the coming year. Be sure to always do your own research before making any investment decisions. So number 1, the US government's Bitcoin reserve fails to materialize. The first big challenge is a potential failure of the US government to establish a Bitcoin reserve, which was a major promise from the Trump's campaign. The idea behind the Bitcoin reserve is simple: buy up 1 million BTC over a 5-year period and store it as a part of a strategic reserve. This move could send a strong signal of institutional support for Bitcoin. However, creating this reserve is not as simple as it sounds. There's been resistance in the Senate, and some experts argue that Bitcoin's volatility makes it unsuitable for such a reserve. On top of that, some are concerned that adding Bitcoin to the government's balance sheet could create further debt or disrupt financial markets. The Federal Reserve in particular has already shown hesitation about owning Bitcoin, making the approval of this Bitcoin reserve seem potentially unlikely. So if the Bitcoin reserve doesn't get off the ground, it could have significant consequences. Without government backing, Bitcoin may see a dip in institutional adoption, which could slow down its long-term growth. But on the flip side, if the reserve is established, it could signal a lack of faith in the US dollar, which might lead to economic instability. This in turn could impact Bitcoin in unforeseen ways, especially in global markets. Number 2, major governments selling their Bitcoin holdings. Another risk Bitcoin could face is large governments offloading their Bitcoin reserves. China, for example, holds nearly 200,000 BTC, second only to the US. So in the event of rising tensions, especially regarding trade relations between the US and China, China could decide to sell off a significant portion of its Bitcoin holdings to destabilize the market and harm Bitcoin's price. Countries like the UK, which holds around 61,000 BTC, could also follow suit. Political tensions, such as disagreements between the UK and the US, could trigger these countries to liquidate some of their Bitcoin reserves for political leverage and financial necessity. Also, there's the risk that countries like Ukraine, which hold large amounts of Bitcoin, might be forced to sell due to economic pressures of the ongoing conflict with Russia. So any large-scale sales done by governments of Bitcoin could trigger lack of confidence in the market. Number 3, the risks of Bitcoin's energy consumption. One of the growing risks that Bitcoin faces in 2025 is high energy consumption, which could attract increasing scrutiny from both regulators and environmental advocates. Bitcoin mining, the process that secures the network and validates transactions, requires a massive amount of computational power, which in turn demands a vast amount of electricity. Bitcoin's annual energy consumption is around 120 terawatt hours, which is more than some medium-sized countries. For perspective, this is more energy than the entire country of Argentina consumes in a year, and nearly double the amount of energy consumed by the Netherlands annually. To highlight the scale even further, the US, with a population of over 330 million people, consumes around 4,000 terawatt annually, which means Bitcoin uses roughly 3% of the entire United States annual energy. And as governments become increasingly focused on sustainability and reducing carbon footprints, Bitcoin's energy usage is likely to draw more attention. The environmental impact of Bitcoin mining, particularly if it relies heavily on fossil fuels, could prompt regulatory actions such as restrictions on mining operations or or carbon taxes. However, when compared to traditional financial infrastructure, Bitcoin's energy consumption becomes even more striking. The energy required to print US dollars, for example, is far less than Bitcoin's. According to the US Bureau of Engraving and Printing, it costs around 0.5 cents to print a $100 bill. And while this is a negligible amount in terms of energy, it's important to note that the traditional financial system, comprising of banks, ATMs, card networks, and clearinghouses, also consumes a significant amount of electricity. A study from the Bank of International Settlements estimated that the global banking sector's energy consumption is about 500 terawatt hours annually, which is around 4 times that of Bitcoin. Number 4, the return of Satoshi Nakamoto. Perhaps one of the most intriguing risks is the possibility that Satoshi Nakamoto, Bitcoin's anonymous creator, could return and start moving their massive Bitcoin stash. Satoshi is believed to control over 1 million BTC spread across more than 20,000 different wallets. This would make them the 19th richest person in the world, by the way. So if Satoshi were to start moving this Bitcoin, it could send shockwaves through the market. A massive influx of Bitcoin on the market could cause a sudden price drop. Additionally, Satoshi's return could raise questions about Bitcoin's long-term prospects and lead to increased regulatory scrutiny. And number 5, rising inflation and interest rates. The final risk is the possibility of rising inflation and interest rates, which could trigger a broader market downturn. With the potential for major trade war and economic pressure, inflation could start to rise in 2025. And if inflation accelerates, the Federal Reserve will likely increase interest rates to curb it. Historically, rising interest rates have been bearish for Bitcoin as it increases the cost of capital and slows down investment in riskier assets like crypto. The initial impact could lead to a significant downturn in Bitcoin's price, leaving many investors caught off guard. That said, if interest rates continue to rise, the Fed might step in to stimulate the economy by buying US bonds and lowering their yields. This would likely be bullish for Bitcoin in the long run, but in the short term, the impact of rising rates could be negative. So these are the 5 risks in 2025 that you should be aware of and be prepared for, just in case you see any of the signs. All right, guys, so let's have a look at what's happening today. As of the time of recording on January 10th, 2025, Bitcoin is trading at approximately $93,000. So I wanted to pull up this chart just to kind of look at some of the support levels and resistance levels. If we look at the current support levels, I think we're looking at, the $90,000 range right now. I mean, if this could test the $87,000 mark, and if potentially if it goes, below that, then I think we'd potentially see a further drop to $75,000. Again, in this video, we're going to go, looking at what potentially could happen in 2025 in terms of 5 reasons that things could be great and 5 reasons that we should be, just cautious of what could happen as well. So as you know, crypto is it's a fun ride, and you just have to be aware of the potential upside, but also the potential downside. And if we look at the resistance levels, I think it's around $100,000. It could be around $105,000 at this point. But I think if we do cross the 100K again, which we did see briefly, we would then test the $106,000 level. And if that gets crossed, I'm excited to see potentially $125,000 as the next resistance level. So moving on, I love this chart. It's called the Bitcoin Power Law chart. And it's basically a great, if you zoom out, I know crypto can be super volatile and you can see it up and down and it can swing 20%, 30% at times. But if you zoom out, and what you need to do is continuously kind of remember where we're at, where we started, it's looking very good, right? So even though 2025 could be cautious and things could happen, the bigger picture and the longer term vision, of course, is that Bitcoin is going to keep, Bitcoin's price is going to continue going up. And so if we look at that and we see where we are today, we're looking at $93,000. The upper limit, if things go really well, hopefully could hit, in this case, it's showing $392,000, which I'm excited about. But if you watch a previous video that we did here, we dropped on the channel, and we'll put the link in the description, you'll see my price prediction. I think by the end of 2025, it is going to be $150,000, and I kind of go into why I think that's the case. Very excited, very bullish on what's coming, and let's get back to the video. Bitcoin's journey in 2025 will be shaped by a complex interplay of opportunities and challenges. Whether it's the post-halving supply dynamics, increasing institutional interest, or geopolitical risks, one thing is certain: this is a pivotal year for Bitcoin. Will it cement its place as the ultimate store of value, or will unforeseen risks derail its ascent? Only time will tell, but as always, being informed is your best strategy. So if you made it this far in the video and you're as excited as I am, make sure to like, subscribe, and hit the notification bell. Join us here on the Crypto Code every week as we bring you in-depth analysis on the future of digital assets. Thank you for watching. See you next week.